I'm Steve Hayes for EPRA, and we're sitting here at the annual conference for the association at the Landmark Hotel in London. I have with me Jean-Edouard Carbonnelle, Chief Financial Officer for Cofinimmo, the Belgian real estate company. Jean, welcome.
Good afternoon.
How do you see the general situation in the Belgian real estate market at the moment, and what are the main factors affecting it for the next 12 months?
Well, as in any country, we have several sectors in Belgium. We've seen a very good performance in the retail sector, and it's continuing. It's probably a general trend in Europe as well. The office sector, which is large in Belgium because of the presence of the European Union, the main institutions, that is the Commission, the Parliament, and also the Council of Ministers. This market has suffered from oversupply, but what we're seeing is that projects which were started back in 2008 or 2007 even have been delivered or are being delivered these years, and now we come to a point where the oversupply has almost come to a stop, to a halt. Therefore, we would expect a better balance between demand and supply of office space, and progressively a decrease in the vacancy rate, which has been historically very high in the last few months, at around 12%. So we hope that within, let's say, not a year, but 2 or 3 years, there will be a better balance and slightly increasing prices for the office sector.
Cofinimmo has been moving out of offices, reducing its portfolio, and going very strongly into the care home sector. How do you see that developing, that market, over the next 12 months?
Well, this is a market that, in a way, as a professional investor, we discovered during the last 5 years. We have a recent history in that, but we see a continuous pipeline of projects. We have seen, of course, many existing projects being offered on the market, especially in the nursing homes segment. We expect that in the coming months and years there will be a need to develop new homes, to build new units based on authorization, because this market is only possible for those who have authorized beds. We also see a possibility to extend this care market to other segments than nursing homes for elderly dependent people. I mean, by example, for psychiatric clinics or post-acute care clinics. There is perhaps an opening also for the acute care segment. And in a way, for us, it's a bit like copying the situation that has existed in the US, where the healthcare segment has fared very well amongst segments in the real estate market. There is a broad demand for new facilities, and also of course, the demographics helps.
Okay. Your other hat is as chairman of the EPRA Tax Committee. What are the main issues as regards tax for the listed sector in Europe at the moment?
Well, there is one very significant issue, and it's a very long-term effort that is pursued, I think, by EPRA and by the most active members who sit on the committee. That is to try to reach this mutual recognition of REIT regimes across countries in Europe that have REIT regimes, so that the investments cross-border would be favored, would be more easily practicable. And we also, in that context, wish to make sure that we are understood as an industry, that, in other words, the advantages of the REITs for the economy at large would be something that is correctly perceived by public authorities. Another point which we deal with at the committee is the level, try to assess the level of taxation between different countries in the real estate sector, and a comparison between the taxation in the real estate sector and other sectors. We have worked at this with the practice of one of the Big Four, and we hope to be able to communicate on that in the coming months.
If we take a step back and look at EPRA as a whole, you're a member as well as being on the tax committee. Mm-hmm. What do you think EPRA's priority should be over the next 12 months as a member?
Well, I'm particularly concerned by the flow of funds to the industry. The listed sector is liquid, but is liquid at the expense of a great volatility that it is not justified or entirely justified by the fundamentals of the sector. And therefore, I'm particularly concerned by the outcome of certain pieces of legislation. For instance, Solvency II could have an enormous impact on the industry if the listed sector does not receive the access as it used to do in the past to the flow of funds from pension money. This would depreciate the value of the listed assets very much compared to the assets, the same asset in the direct market. So I think we should, within EPRA, build bridges to the insurance sector and try to sort out exactly the impact of Solvency II for the insurers, and whether there are still ways to interpret the directive and the way to implement it so that the impact on a sector is minimized or even ends up being favorable.
Thank you very much, Jean-Edouard. For further industry interviews, please go to epra.com and read.com.